Hi guys, today I found a new post from a username dash capital SIM dash car payment as a car enthusiast. Basically he writes that what portion of income would it be acceptable to spend on a car if it brings the only enjoyment in life? I think later on he kind of changed that to the biggest enjoyment in life instead of the only. I will work on my GTI, go to track days, or attend the car shows, and get a lot of enjoyment from it in my 100 mile round trip commute to work. So he drives 50 miles one way, about 40 to 45 minutes one way to work. Unfortunately, the miles are getting adding up, and I will be selling it soon at 150,000 miles. I am 28 and living in low cost of living area. Rent for a bedroom here is $1,000 per month, and the rest of my bills add up to $900 per month. The only debt I am paying off are my student loans, a whopping $110,000 at 2.9% for $600 per month. My gross income is 105, and after contributing 15% to my 401k, my monthly net is 5,400. This allows me to save a good chunk of change for my car hobby. Is financing 25,000 for a car realistic financially for me? My payments will be roughly about 550 a month on it, which fits my most car buying guides. Edit, the car is 2018 Ford 40i with 15,000 miles on it for $37,000. With my down payment and trade-in, I'm financing 25,000. So the short answer to that question is yes, right? With the amount of income that he has and with all the expenses that he's got, it looks like that's not a problem. The rule of thumb that I actually use for myself is the whatever your take home is, your net income is, and for the week, and divided that by two. So like usually use, whatever the weekly bring home for the whole week will be like your housing expense, and half of that is your car expense. So in your particular case, the breakdown of the number would be $5,400 per month times 12 divided by 52 divided by 2, right? So 5,400 times 12, which is what, 64 and change, 60, almost 65,000. Divide that by 52 weeks, gives you 1246, and divide that by 2, which is about 623 a month. Ideally, that is at 5 years or 60 months and what have you. The interesting thought here is that 25,000 financed for 60 months at 550 a month is about 11.5% interest rate. Now, if you did that for 48 months, that's like 2.7% interest rate. So I'm guessing either the loan amount is a little bit higher, monthly payment is a little bit lower. I don't think you're paying a lot more than, I don't think you're going to be paying that high of an interest rate. I think you mentioned somewhere between 6 to 8%. So I don't know if you're financing for like 4.5 years maybe, or maybe a little bit higher loan amount. Either way, I'm sure you're getting a good deal on the interest rate and stuff like that. And of course, my thought always is that, yes, the interest rate matters, of course. Everybody knows that. But I think once you get the interest loan signed up, I don't know if the interest rate matters as much since you already got the loan, you already got committed to the monthly payment and all of that. And of course, paying on the debt, you want to pay it off as fast as you can, as soon as you can. Um, I This actually brings up a little bit of memory, and I kind of had to think back to myself when I bought my car. Very similar situation. I was in my late 20s as well. I actually ended up purchasing a Mercedes E-Class in my 20s, and I can tell you that, again, similar income, similar situation, similar expenses and stuff like that. Plus or minus a little bit. I don't think it makes a whole lot of difference either way. I actually didn't have any debt at that point other than the house. I had a mortgage, but I didn't have any student loans and stuff like that, luckily. But again, it's not. I don't think it was much to make a whole lot of difference one way or the other. But I got the car, and my payments were roughly about that much. I think I don't remember exactly how much it was. It was somewhere in the 500s range. I had a little bit of down payment and stuff like that. And my interest rates were so low. I think it was like 1.9 or something like that, 1.7 or something like that. And again, I and this is back in the days, right? And I used to work for the car dealership and stuff. And I know I got a good deal on the car, I got a good deal on the financing and all of that. And I really liked the car. And again, because I worked in the car industry, by the time I left, I think it was like over 7 years. I think by the time I got the car, it was like 3 years, maybe almost 4 years, maybe. And the time that I was there, I driven many different cars. And the car that I purchased, there was like, I don't know how many car it was, like 6 cars, 7 cars that I purchased myself. And I also kept all those cars for 100,000 miles plus, right? And when I got the car, I loved it, drove it, loved it. But I think after like 2 years, after 2.5 years maybe, it started to getting, like, it's just like another car. My commute was not as long, not as much, but I also, because it was all back roads, and it took me 35 minutes one way to get to work or get back home. And maybe because I'm not a car enthusiast, I used to sell cars, but I'm not an enthusiast. Maybe so that makes a little bit of difference. But first, like I said, 2.5 years, I love the car. I love it, driving and feeling it, everything like that. Excuse me. Making the payments on it wasn't a problem, nothing like that at all. It's just after so many years, it just got, like another thing. It's just the honeymoon phase has ended, right? And so it wasn't really like, oh my gosh, I gotta have this car. I gotta have, I gotta drive this car. After that, in the honeymoon phase, it was just like another car to me. And at that point, your expenses, your maintenance starts going up. If you have to get a new tire, or you have to, do, like in the Mercedes case, they have A service, B service, and stuff like that, which, the cost can be a little bit higher. And so, at some point past that, I know the cost of the BMW, the upkeep of that, especially with, 2018 is already being 5 years old, with 15,000 miles on it. It's out of the warranty, right? Because 5 years. And if you're driving like 50 miles, what would you say? I think one way is like 200 some miles per year, 200,000 miles a year. I mean, 20,000 miles a year, 25,000 miles a year. That's putting a lot of miles on your car, and so your maintenance on that is going to be significantly higher than what I would think on your GTI, especially if you got 150,000 miles on it. And so, I definitely think you're going to enjoy the car. I'm sure you will. I'm sure you'll love the car for the first, maybe like kind of like me, maybe 2.5 years. But I think after that, just the sheer fact that the cost of upkeep on the car is going to be so much, where I just don't know if you're going to be enjoying it for anything more than that, right? So as long as you're aware of what you're getting into as you're doing this, I think you're totally fine. Like you're financially, that's not a problem. Again, going back to my story with the car, I paid it off in 3 years, because shortly after I kind of ended the honeymoon phase, and just because I didn't want to pay on something that I didn't really absolutely love, like I didn't want to. So I wanted to pay it off fast as I can, so I just paid it off. And again, the maintenance was still there. And really, what I should have done was, after I paid it off, I should have traded the car in. I think that's like right when the I think my warranty was expiring, or it was about to expire, or it just ended, or something like that. And so again, that's when I should have traded the car in. Shoulda, woulda, coulda, right? But I didn't, just because I've never traded the car that early on, like with that few miles on it, with that new of a car. And to me, just was just like, like a waste of money type of thing. So I never pulled the trigger, and I still have it. In fact, now my wife drives it, and rarely, seldomly, I drive it sometimes, and anytime I get to drive it, I love it. I get that feeling again, because now I drive my wife's car, which I sold it to her when we met. But anyway, so like anytime I get a chance to drive the car, I love it. It's good handling. I love the feeling behind the wheel on that car, and it's old now, but still I kind of love it. It's only got like 60 some thousand miles on it. It was super low mileage, because we don't drive as much now. So that's what that is for the card itself. Now, as far as the financing is concerned, because this is a personal finance, and the question you asked is, what will be acceptable to spend on a car? So again, the short answer to that question was that you're more than within your budget in your means to kind of pay that off or buy the car and stuff like that. One thing I want to kind of point out is that you're currently renting. I think you said my rent for a bedroom, for one bedroom here is $1,000 per month, right? So I don't know if your goal is to kind of live there as long as you can. I don't know if you're purchasing of a home is in your future sometime. I don't know if you have money set up for that. There's no talk about the emergency fund, nothing like that at all. But assuming you have all of that set up, right? Assuming you have a 6 months, maybe 9 months, 12 months set aside, that's good. If you are looking to purchase a house sometime soon, I would definitely get that started as well. As well as having, little bit extra budget for something like this. And when you have like a big purchase, right? So like I always talk about having two separate savings account. One is for your emergency fund, which is a 6 to 12 months emergency fund. And the other one is a major purchase like this, when it's a car, purchasing a down payment on a new home that you want to live in, or the maintenance cost. Something could happen, like your health, your car fix or maintenance, or like if you own a home, anything could go wrong with the house. So something like that, so like a major purchase. And the first one is actually about, in case you lost your job or you got hurt or, you couldn't work anymore for some reason or another. That's that. And then this is like a separate category. So I'll definitely, talk about something like that. And another is, somebody mentioned it, but I think you kind of said you're not interested in something like that. But moving closer to work, and of course this happens, has something to do with where the work is, right? So if you're like, I think you mentioned that your office is actually in a place where you ideally don't want to live in. It's like dangerous or something like that. Obviously, if that's the case, you don't want to move there, and that's understandable. But one other thing about where I live now and where I used to live in the past is that I grew up in a low cost living area, and maybe in the middle, mid cost of living area. Now I'm in like a mid to high cost of living area now, and I've learned so much by just moving here about the how the money works, and just how the people think and how people act and behave and stuff like that. And there's so many other things that I've learned just by living here versus living there at the other places that I grew up in and I lived in. And so, while you're still young and have low cost of living, I encourage you to actually try that out to see how that's like to you. Of course, you may not like it. That's one of the things about people say, hey, you want to kind of like keep an eye on your expenses. You don't want to kind of, keep increasing your cost of living as you earn more income. I get that 100%. But just the fact that I learned so much about this thing that I just didn't even know it kind of existed, where it kind of helped me open my eyes to a lot of things by living where I'm at now. Not to say that, this is, end all be all, but it's just that, again, it just gave me another perspective and, how I can live. So that's another thing you could maybe try, especially since you're renting now. Maybe you could rent somewhere else for maybe a year to see if you like it, and see if there's something else that you can kind of learn. But that's my recommendation to you. It sounds like, having a $550 monthly payment is very affordable. Especially since if you're a car enthusiast, and especially since you're driving so much, I definitely think you should definitely get the car. It's just, in my experience, it's just that it was great for 2.5 years, and it just wasn't so good afterwards. It's not that it was really bad or if anything's changed. It's just that it just became like another routine type of thing. It's like, it makes no difference for me whether I drive that car versus another car to go back and forth to work or anything else. Like, I still had that car, and my wife had a different car, which I started driving after we got married, and I took that car to work, and it was no difference. It was perfectly fine. It wasn't an issue for me. Now, of course, as I mentioned, every time I had a chance to kind of drive my other car, I enjoyed it. But the difference is that it wasn't like I gotta have it or I had to have it. But when I got a chance to do it, great. If it didn't make a difference, right? So hope that helps. Hopefully, whatever the decision you decide to make, it sounds like you're already kind of like pretty much like 90% into it. So I think it's a good deal. If you found a car that kind of makes sense, and you're getting a good deal on it. It's got a lot of modifications that was done on it, and it's the exact car that you're looking for. And I don't think it does not make sense financially. It's just that that honeymoon phase could be not as long as you think. So hope that helps. If you have any questions, leave a comments below. And then until next time, thank you.